In the metals quadrant, taking a look at the December gold futures contract, which got back almost half of yesterday's sell-off with a strong rebound, bouncing off the 50-day moving average with respectable volume. As a matter of fact, excluding the volume from yesterday, today's initial volume reading, keeping in mind that this is not official volume, looks like it's going to be the highest since September 3rd, again, excluding yesterday's volume. This leaves us with gold still in an uptrend long term, but in the short term, bouncing off a recent downtrend. Gold would have to rally over 1.8% now to avoid its second consecutive week of lower prices, with only basically 1 day left in the trading day. So it would have to be a pretty strong rebound tomorrow. The high today, 27.0780, that was up 1.18%. The low, 26.5030, that was down 0.97%. As I speak to you right now, with a tiny bit of time left in the session, we're still up just around 1% coming into the close. There is some speculation globally that China will resume gold purchases soon. China has been aggressively purchasing the precious metal month after month until about 3 or 4 months ago when those purchases stopped. But some analysts say that the US will soon be in basically a currency debasement type of economic scenario, which will cause foreign governments as well as retail traders to load up on gold and create a tailwind for the yellow metal. Now, this is a theory, but it is gaining some strength, with JP Morgan releasing a note about it yesterday. Also, rate cuts today. The Bank of England cut their rate by 25 basis points. The FOMC cut their key rate by 25 basis points. And this is sort of the basis of today's gold rally, other than the support from the 50-day moving average. Those two rate cuts have literally pushed the dollar lower by 0.8% against the yen, 0.6% against the pound, 0.5% against the euro, 0.5% against the Canadian dollar, and 0.25% against the Swiss franc. Even Bitcoin was up 1.39% against the dollar, and this pushed yields lower today. They were lower to start the day, but after the FOMC meeting, we ended up down 10 basis points on the 5-year yield, down 9 on the 10-year yield. So all of this being a little bit of a tailwind for precious metals, gold specifically.